Greetings, I'm Shaun Pruitt, Zacks Equity Strategist, and today I'm going to be discussing two capital efficient stocks to buy on the dip in Inigo Eagle Mines, ticker symbol AEM, and Comfort Systems USA, ticker symbol FIX. So as two of the market's top performers in 2025, Comfort Systems USA, ticker symbol FIX, and Agnico Eagle Mines, ticker symbol AEM, are both sitting on exhilarating year-to-date gains of over 100%, despite a recent pullback from their all-time highs. And Comfort Systems' dominance as a provider of comprehensive heating, ventilation, and air conditioning systems and services has made its stock an ideal buy-the-dip target. Meanwhile, Inigo has started to create the same narrative as a prominent gold miner and producer that has taken advantage of a historically high commodity price for the precious metal. And most supportive of the notion that the incredible performances of Comfort Systems and Inigo stock will eventually continue is their capital efficiency, which is crucial to shareholders as it directly impacts profitability, growth, sustainability, and ultimately total shareholder returns. And as you can see here in the total return chart over the last 3 years, Comfort Systems stock is up over 670%, and Inigo stock has soared over 200%, with both vastly outperforming the broader indexes during that time period. So Comfort Systems has superior capital efficiency, and the stock has ballooned to over $800 a share and recently traded at an all-time peak of over $1,000. So superior capital efficiency has fueled Comfort Systems expansion and is the premise for a stock commanding such a lofty price tag. And Comfort Systems is in a rare upper tier of companies that have a moat in terms of high return on invested capital, or ROIC, and increasing ROIC, along with strong invested capital growth and a high free cash flow conversion rate. So very effectively turning its invested capital into profits, which is one of the clearest indicators of long-term shareholder value. Comfort Systems' return on investment capital ratio has soared to an eye-catching highs of 35.9%. And this shatters the ROIC average for its closest industry peers and the broader Zacks construction sector's average of 6%. And it's also well above the often preferred level of 20% or higher, which you can see there. So pretty magnificent chart as far as this ROIC soaring and continuing to increase to new highs of almost 36%. And impressively expanding its asset base as well, which helps drive future earnings. Comfort Systems invested capital funds are at new peaks of $2.75 billion as depicted below. So very impressive chart there as far as growing its asset base, which again helps drive future earnings. So additionally, Comfort Systems has a preferable free cash flow conversion rate that's above 80%. and illustrates the company is very efficient at turning its accounting profits into actual cash that can be reinvested or used to reward shareholders. And in correlating with such, Comfort Systems has returned over $500 million to shareholders this year via stock buybacks and is very modest but increasing annual dividend, which is currently at $2.40 per share and has now grown by 39% in the last 5 years. So moving on, Inigo Eagle Mines has entered the high quality capital efficiency conversation, and capitalizing on its historic surge in gold prices, Inigo should be able to sustain its rise to prominence. And Inigo has emerged as a leader among gold miners, with its stock hitting a high of $187 a share back in October, highlighting its pleasant total returns of more than 200% in the last 3 years. So optimistically, Inigo's return on investment capital ratio is currently at new peaks of 12%. And while this isn't necessarily eye-catching, the steady increase is compelling. And as you can see right here, Inigo's trailing 12-month ROIC has crushed the basic materials sector's average of 4.33% and is notably on par with the Zacks mining gold industry average. So more reassuring is that Inigo's invested capital has swelled to record highs of $3 billion, which is surprisingly a larger asset base than Comfort Systems. And on top of this, Inigo has a free cash flow conversion rate of 106%, which you can see here. And it's also important to note that the drop from these extreme peaks is actually good sometimes, because a very high or extremely high free cash flow conversion rate can also indicate that a company is underinvested. So it still does have that high free cash flow conversion rate of 106%, which is preferred. And it's also worth mentioning that the gold miner has returned nearly $900 million to shareholders in 2025 through its respectable 0.96% annual dividend yield and stock repurchases. So the bottom line is these stocks The stocks of these very capital efficient companies are currently sporting a Zacks ranked #1 strong buy. And to that point, positive EPS revisions are starting to magnify their expectations of high double-digit earnings growth in fiscal year 2025 and fiscal year 26. So keeping this in mind, Comfort Systems USA and Inigo Eagle Mines stock have become two of the most appealing buy the dip targets to consider at the moment. Again, I'm Shaun Pruitt, Zacks Equity Strategist. I hope you enjoyed this content. For more, please feel free to visit zacks.com/promo.